What is now time to turn our attention over the markets. This week, we're taking an in-depth look at the hog markets. We were joined earlier this week by Schulz of Iowa State University to get his take. Here's our conversation from Wednesday afternoon. Well, let's talk about the latest hogs and pigs report. That data that came out from the U.S. Department of Agriculture. As you had a chance to review it, did any numbers stick out to you in particular that can help shed a light on what's happening in the lean hog market?
So we've had now a couple of weeks to digest those numbers, and I think it came in pretty much with where we seen it pre-report. If there was some surprises, I think that the heavy market hog category was larger than expected, but we really seen that in the slaughter numbers. And then when you looked at the farrowing intentions, I think those came in rather pessimistic compared to pre-report expectations and where we were even the previous quarter. So, as I kind of look at it, it maybe shapes up as short-term bearish, certainly what we're seeing, and maybe a bit of long-term bullish as we look at supplies potentially tightening up as we get into the later part of 2023 and into 2024. The one thing I really want to highlight is, producers respond to profit expectations, and we're certainly seeing those profit expectations really take a turn into red ink. But also, we have a lot of outside forces, I think, impacting both producers as well as consumers as we talk about inflation and interest rates and consumer incomes. Those are all weighing across the pork supply complex, and I think that's coming out in some of the numbers that we're seeing.
Yeah, let's dive a little bit deeper on that and kind of size up the current market as you see it. What are the factors leading to the prices we're seeing right now? And I guess for somebody who doesn't closely watch the lean hog market, share with our viewers kind of where things are at.
Sure, and I'll point to the June contract, as that's going to be kind of the one here in focus shortly. And you've looked at that June contract trading in late 2022 and into early 2023 in that 108 to 110 range per hundredweight. Now you're seeing that contract trade in that 87 to 88 range. So we've seen a significant sell-off in the lean hog complex. Other contracts would show, similar trajectory over that time period. When you look at supplies, we've had larger supplies than we've expected, but that's been really priced into the market for some time. Look at hog slaughter's been up about 1.5% since the beginning of the year. Since March 1, the latest hog and pigs report, it's been up a little bit more, but the market has realized that. I think what has been significantly weighing on the market is when we talk about the demand situation. Remember, producers, it's not prices that consumers are responding to, it's consumer incomes, it's prices of substitutes, is really, I think, what's impacting our hog prices now.
I want to talk a little bit more about that. Is that something you're seeing across the board with some different, protein choices that's specific to the hog market, ultimately pork there, Lee?
Well, when we focus in on pork, I think it's important to keep in mind, what is driving the pork complex. What I like to highlight is that the bellies have been significantly below year-ago levels. I think that speaks to really what's going on in the marketplace. Certainly, egg prices have been higher, so as you looked at higher egg prices, bacon's a complement to that. I think that's pressured the bacon complex and pressured the wholesale and hog prices. Also, you have to think about food away from home. So we know that pork does really well away from home. And when you think about consumer incomes have been impacted, higher gas prices, increased inflation, that is certainly impacting consumers and what they're able to purchase for pork. We've had the latest CPI data that came out for March. We're still seeing inflation at 5%. That's actually the lowest since April, May of 2021. But that basket of goods is still the highest we've ever seen it, right? When you look back to 82.84, which is our benchmark, a dollar then is worth about 33% of what it was worth then. So you can think about that as that's really weighing on consumers' purchasing power of their dollar.
Yeah, no doubt about that, Lee. Well, let's kind of extend this out to an outlook to 2023. Use the term bullish when you're looking at the kind of the long term of this market. Tell me more about your thoughts as we continue through this year.
Yeah, so when you look at 2023, these could be the fourth highest prices ever still for hogs. And, that may be a little bit bullish when you think about that. But when you pair that against costs, this is going to be some of the worst returns that we've seen producers have. You have to go back to 2009 or maybe even 10 years before that when we look at how much red ink we've seen in the pork industry. So I think that points to the really high cost of production. My model suggests we're about $1 per pound on cost of production for a farrow to finish operation. That's 50% higher than we've seen in 2020. So those are notable levels really weighing on those returns of producers. But if we do start to see the market, I think, squeeze up a bit as far as inventories and production, that gives me a little bit stronger story as we get into 2024 and maybe a bit of a rebound in prices.
It's going to do a deep dive here on this market. Lee, we sure appreciate the time here on Market Journal.
Thanks for having me.